BigBear.ai Holdings is trading live on the New York Stock Exchange at 4.18 per share during this intraday session. We are watching the stock fluctuate around this 4.18 mark, following a modest opening at 4.24, putting the current intraday market movement flat to slightly down for the day, but it rests on top of a larger, highly noticeable macro shift. The stock has put together an impressive 12.97% gain over the last 30 days, shaking off a painful downward trend that characterized the earlier months of the year. The immediate reaction to seeing a low-priced software provider move like this is to assume it is just another speculative technology play riding the coattails of massive market liquidity. But looking closer reveals a dynamic that most everyday investors are missing entirely. Right now, institutional block orders are quietly positioning themselves within this name, driven by a sudden, massive expansion in the company's federal contract pipeline, specifically a unique $53 million sole-source classified military award. While the retail crowd is busy looking for the next mass-market software application, the real action is happening in highly secure, isolated government networks where consumer software cannot go. The common belief keeping a lid on this stock is that it is a structurally unprofitable micro-cap business that is too dependent on erratic government defense cycles to ever achieve stable software margins. Many traders look at the trailing 12-month negative earnings per share of 70 cents and immediately write it off as an uninvestable cash burner. They look at the $2 billion market cap and think the valuation is completely unhinged from its fundamental baseline. This expectation of impending dilution or structural failure is exactly what creates the current tension in the market, because the reality hiding behind those headline numbers paints a vastly different picture. The underlying business just reported a massive first-quarter contract backlog that expanded by 14% sequentially to reach $281.9 million. This provides a level of multi-year revenue visibility that very few standard software firms can claim right now. When you see a company expanding its gross margins and stacking high-margin federal defense contracts, the thesis changes completely. The expectation is a struggling contractor, but the reality is a deeply embedded operational partner for national security networks. To truly understand how this volatility plays out on the tape, you have to look at the trading volume and daily swings we have seen over the past week. The stock has climbed over 6% on a rolling 7-day basis, and this movement has been supported by a distinct rise in daily trading volume, indicating that this is not just a low-volume retail pump. Institutional accumulation patterns show that shares are moving from short-term trading accounts into firmer hands. This institutional interest is closely tied to recent sector momentum within defense technology. As geopolitical tensions remain elevated globally, procurement agencies are aggressively accelerating their budgets for decision intelligence platforms. The macroeconomic pressures of inflation and high interest rates, which typically crush small-cap tech companies, are actually acting as a catalyst here because government spending on defense software is largely insulated from consumer economic slowdowns. A major driver of the recent daily swings was the news of Chief Financial Officer Sean Ricker selling a block of 10,000 shares at 4.33 per share. While the superficial crowd views any insider selling as a massive warning sign, seasoned investors recognize that a $43,300 sale is practically negligible when that same executive maintains a direct holding of more than 609,000 shares. The market digested that insider transaction with ease, and the price consolidated firmly above the 4.1 support line. This brings us to what the business actually does on an operational level. Founded originally in 1988 and later going public through a specialized merger, BigBear.ai has spent decades building out an enterprise that focuses entirely on high-consequence decision environments. They do not build retail applications or consumer software. Instead, they provide sophisticated analytics, data engineering, and machine learning tools designed to synthesize messy, fragmented data streams into clear, actionable choices. Their software is used for predictive logistics, digital identity verification, and complex cybersecurity assessments. By integrating strategic acquisitions like Ask Sage and CargoSeer, they have managed to plant their flag directly inside military supply chains and secure generative software applications. Their platforms allow a logistics officer or a national security analyst to run discrete event simulations, mapping out various courses of action to optimize routes, delivery times, and physical security parameters before a single asset moves. If you look at the broader landscape of where people allocate capital today, whether through an individual brokerage using advanced online investing sites or relying on algorithmic management like Schwab Intelligent Portfolios, the focus is almost always on commercial scale. People look at a massive enterprise like an Nvidia stock or an Apple stock because they understand consumer and corporate demand. But self-investing requires looking into the cracks of the market where standard consumer metrics fail. If you look at the major platforms where retail interest is concentrated like the Robinhood app or SoFi Invest, the discussion around automated technology is dominated by commercial language. Traders using a Robinhood stock trading account or setting up a long-term plan via interactive broker stock trading are often searching for mass market adoption, yet the institutional desks utilizing an interactive broker's platform or executing large block trades through premium wealth networks are looking for sticky, long-term government moats. Comment below how many shares of BigBear.ai you currently hold, or if you are completely avoiding these micro-cap defense stocks in the current macro climate. It is vital to see where our community stands on these highly volatile government contractors. When you examine the financial mechanisms of this enterprise, the long-term shareholder return over a 3-year period reflects a massive almost 8 times valuation swing at its peak, showcasing just how wild the sentiment cycles can be. Older quarterly reports showed a business that was heavily weighted toward low-margin professional consulting services, which is exactly why the broader market became deeply skeptical. The historical performance was marred by the classic
pitfalls of government contracting: long procurement delays, heavy customization costs, and lumpy cash flows. But the recent commercial agreement with the Panama Transshipment Group to deploy an international shipping compliance application shows that the company is successfully exporting its defense-grade logistics software into the commercial maritime trade sector. This move into airport operations and global trade security represents a fundamental shift in their business model, moving away from pure advisory work and toward repeatable, high-margin software deployments. Looking at the future outlook, the roadmap for this stock is defined by a sharp contrast between speculative risk and absolute execution. The upside potential is anchored by their expanding contract base and the accelerated deployment of autonomous system software within the Department of Defense. If the company can successfully convert its $282 million backlog into recognized revenue while maintaining its newly expanded gross margins, the current analyst consensus price target of 5.5 per share will look conservative. The ongoing integration of digital identity tracking and biometric systems into global travel hubs provides a secondary growth lever that operates completely independent of the Pentagon budget. However, the downside risks are equally clear and demanding of your attention. The company is still operating with a negative net income profile, and any unexpected delay in federal funding allocations or a sudden pause in their commercial logistics rollouts could easily cause the stock to break below its recent 52-week support levels. The core of this entire investment thesis comes down to analyzing the gap between market perception and operational reality. The broader market expects this company to behave like a standard fragile microcap technology entity that will inevitably succumb to cash burn pressures or get crushed by massive cloud service providers. The reality is that they have built a specialized, highly secure competitive moat within federal networks that general-purpose consumer software cannot touch. They are carving out a distinct space at the intersection of national security, complex supply chain logistics, and digital identity management. While the average retail trader on a basic Robinhood app might get spooked by daily price swings or minor insider sales, institutional players are focusing on the structural growth of a defense pipeline that is backed by real multi-million-dollar federal mandates. To wrap it all up, the story of this stock is a classic study in structural transformation. It started as a traditional government contractor with volatile revenues and has steadily rebuilt its foundations into an integrated provider of secure decision software. The tension between the low nominal share price and the massive $282 million backlog is where the opportunity and the risk live side by side. For anyone managing their own capital through a self-investing strategy, or looking at sector allocations across online investing platforms, understanding this distinction is what separates a speculative gamble from a calculated position. It is an asset class that demands constant vigilance, precise tracking of quarterly backlog numbers, and a clear understanding that in the world of national defense software, long-term operational integration matters far more than short-term retail sentiment. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.